Hello and welcome to episode 3 of my weekly portfolio update here on The Last Investor. My name is Dan. If this is your first time watching, then you've caught me at the very start of my journey to financial freedom. My goal is to use the dividend growth investment strategy to grow my portfolio long term. I invest £200 every week and update you on my experiences through the highs and the lows. I follow 4 rules in identifying a core group of stocks that I invest in. I then allocate my weekly funds to the ones that drop in value. The lower they drop, the more I allocate my weekly funds to them. Also, by investing weekly, I'm able to follow the market and hopefully I'll make the gains when they go up, but most importantly, those dividends will be instrumental in the growth of my portfolio overall. Today I'm going to talk to you about a few things. First, I'll give you a weekly update on my portfolio. I'll then talk to you about what my allocations were for this week, what stocks I'm adding or deleting from my portfolio, what the verdict is on my portfolio. I'll also talk to you about whether we are in a recession or not, and what I'm doing personally to prepare for it. So firstly, in relation to the portfolio update, as you can see on the screen, I currently have £1,019.52 in my account. In fact, all but £71.25 have been invested, which means that I've invested about £1,028.75, and my portfolio has dropped in value by 8.48%, and in fact the invested amount is now worth £948.27. Most of the drop has been accounted for by the mining stocks that I have, which is basically Rio and BHP, both down about 12% and 11.5% respectively. Overall, my other stocks are also down. Bellway is down by 3.28%, whilst Trig and 3i they appear to be the most resilient of my stocks, being down just by under 2%. When you compare that to the overall market, you'll see that my accounts have done pretty badly indeed. FTSE is only down 0.4%, Nasdaq is down about 1%, S&P 500 is down about 0.5%, and the Dow Jones is in fact up by 0.03%. But that's not going to deter me. As I said, this is a long-term outlook. The whole purpose of me investing is to buy future income streams, which is effectively dividends. So my aim is to build up a large stock of shares, and those shares would hopefully pay me dividends in the future. So I'm not too bothered about how low my portfolio has dropped in value. What really matters is that I invest in very, very decent stocks which can stand the test of time. I would say between 10 to 20, 30 years. If these companies are still around, then that's what matters to me. Hopefully the values would have gone up in over time, over that length of time. So in terms of my allocations for this week, on the 6th and the 7th of August, I bought 2 more shares in Rio at £43, and I also bought an additional share in Rio for £41.98. So as you can see, the one purchase on the 7th of August was £41.98, and the purchase on the 6th of August was for 43.03, 2 shares there. Overall, the average share for Rio is now 46.04 per share. But if you look at the current share price, it's currently showing as £40 and 42 pence. The reason why I bought some more shares in Rio at that stage was because the ex-dividend date was the 8th of August, so I wanted to get in there before that date came along. And my next allocation will be to the Trig. Trig has an ex-dividend date on the 15th of August, so I'd like to get a few more shares before that. I think I'll probably be using half of my next week's allocation to buy Trig, so probably about £100 worth of Trig shares I'll be invested in. And I think I'll still be buying some more shares in Rio because it's still, for me, it's still relatively discounted, and I'd like to be able to pick up some more shares at that rate of £40.42. Of course, if it goes down, I'll look to be buying some more shares still. In terms of the other allocations, I'd like to buy some more shares in Bellway as well. I'll be looking to purchase probably about £60 worth of shares in Bellway and probably about £20 worth of shares in 3i. In terms of BHP, as I said, I don't have any intention of investing any further in BHP. That is not going to be part of my long-term strategy. It's not in line with my principles anymore, and I talked about that in my previous videos. You can check that out for the reasons as to why. So what new stocks am I going to be adding to my portfolio? So I think I mentioned in my previous video that I will be looking to add Sentiment to my video. I've done my 4-rule analysis of that particular stock, and as far as I'm concerned, I think the stock is at a good value at the moment. Even though it's seen a surge in its price recently, it's still at an undervalue in my view. It's a really good stock, and it meets all the criteria that I've set myself to check for companies, and I will be investing in that. But what I might do is only invest a very small amount to start off with, because I anticipate at some point in the future the prices will go down, especially when stock prices pick up. So I'll probably just buy very small shares in it at this point in time, because obviously the current surge in its price. So what's the verdict on my portfolio so far? Well, it's still early days, as I said. My core values, as long as my core values are still being met, then I will be investing in these stocks that I've chosen so far, and nothing seems to suggest to me that these stocks are no longer good value. I think they're still good value, and I'll be investing in them going forward. So that will be it for that. Obviously, as I said, in relation to BHP, I would not be investing any further in it, and as soon as that goes into the green, my intention is to sell BHP. So where are we in relation to the recession, or are we in a recession? That's the question to be asked. Well, UK GDP fell by 0.2% in Q2 of 2019, and in order for the economy to be in a recession, there would have to be 2 consecutive falls in GDP. So if Q3 of 2019 were to see a fall, then we would technically be in a recession, and I can't guess as to whether or not that's going to happen or not, but the indicators would seem to suggest that it's very likely that we will see another drop in GDP for Q3. So far, what we know is that manufacturing fell by 2.3%, whilst the production sector on the whole fell by 1.4%. The construction sector fell by 1.3%. So I think the only sector that didn't see a fall was the service sector, which had a 0.1% marginal growth. But on the whole, it doesn't look very. The outlook doesn't look very good. And if we do see another fall in if we see a fall in Q3, then I think we could see some problems ahead that will most likely affect the stock market as well. especially when earning results come in again. That seemed to have a major impact recently, and it may well have some more further impacts down the line. So far, I don't think we've seen a great deal of fall in the stock market. I still think it's a bit overinflated. So there is still a lot of room in terms of correction in the market. So that's something to keep an eye out for. Of course, in the UK here, we've had the issue around Brexit, which hasn't really helped the situation. And no doubt, with the impending exit date of the 31st of October, I think a lot of companies are obviously worried about the impact of Brexit and how that is going to affect import and export and overall trade between the UK and the EU. And that, of course, is going to affect productivity generally. Then just looking at what's happening outside of Europe, in the USA and China, we've obviously had the difficulties in terms of the trade war that's going on there, and that isn't helping the situation either. We also know that the Fed has cut the interest rates by 0.25%, and again that's another issue which could be an indication that the economy isn't really doing so well on its own without being assisted by the Fed, and that may suggest that the economy is on the whole market is on life support. Who knows? But it's certainly very difficult times, and there are a lot of warning signs out there that things aren't quite good in the markets at the moment. What I've also seen throughout my individual search for decent stocks, I've seen a lot of companies with very, very high levels of debt, and I see that as a real problem, and that's why I don't see there being many bargains in the market at the moment, and it really is an indication that the market is currently overinflated. Stock markets seem to be at all-time highs as well, and really these are all signs that we are definitely in a bubble. And if you go by what Warren Buffett says, it says be fearful when others are greedy and be greedy when others are fearful. I would say that this is certainly a time to be fearful in terms of investing in stocks which are overvalued, and being very careful to not to invest in stocks which are overvalued. And in terms of finding those rare gems, if you do, then when they drop in value, those are the times to be very greedy in terms of buying into them. And I feel I've been doing so with Rio Tinto at the moment, and also with the renewable infrastructure. So I'll be investing heavily in those as time goes by, and with confidence as well. So what am I doing to prepare for the future? Well, as I said, I stick to my principles. As long as a company meets those 4 main principles that I've stated in previous videos, my intention is to continue investing in them, and that's what I'll do. If a company doesn't meet that principle, even more so now, I apply more scrutiny to that. I'm more stringent and strict with assessing businesses going forward, and if they don't meet that rule, then I will not be investing in them at all. It's really that simple, and that's how I prepare myself going forward. So thank you for following me on this journey, and we'll see how I get on. Hopefully I'll bring you some more updates during the week as well when I carry out my round of investment. But for now, peace.